OPEC Plus members will meet later today to decide whether to release more oil as planned or change course. Alex Booth is head of research at Kpler and joins us now. Alex, what are your expectations from this meeting?
Hi there. I think we're actually probably looking at a slightly different view to the majority of the market, it sounds, in that we think OPEC Plus are likely to maintain that momentum in releasing additional oil. And let's not forget, we're talking about additional oil in January. The decision for December has basically already been made. Unfortunately for OPEC and the markets as a whole, we're looking at imperfect information. In terms of the prompt data, we're looking at a relatively still tight market as we stand today. That's obviously not taking into effect any impacts on demand going forwards, but we're in a very low stocks environment. The net supply is kind of reasonably balanced, or was reasonably balanced through November. And the data that we have so far indicates that OPEC Plus pretty much fell in line with market expectations of how much oil they would be supplying to the market. They basically caught up from when they were lagging a few months ago. So they're pretty much on track with their plans. So our expectation is, given the lack of information that we still have, there's very mixed messages as well from the pharmaceutical companies. You have, yes, Moderna's coming out with a much more kind of bearish tone, but then Pfizer and Astra are saying, actually, as long as you're vaccinated or you've had boosters, that it's not such a bad situation. We think they're likely to actually maintain that momentum. Let's not forget, it was only barely a month ago that the market as a whole, or the oil-consuming nations, were calling for more oil to be released into the market. So it carries favors with oil-consuming nations as well to allow a bit of a stock build going through into next year, especially considering how uncertain the situation is, as we say.
Well, let me ask you then, what would be the driver for this? Is this the producers ultimately capitulating to the political pressure we've seen from President Biden and other consuming nations that have resorted to SPR releases to make up what they perceive to be a shortfall?
I think it's probably a bit extreme in terms of capitulating. It certainly helps them carry favor with the likes of China and India, and it certainly doesn't harm the relationship with the US. Let's face it, there's a lot of uncertainty around the Saudi-US relationship at the moment, and it helps in that direction. But ultimately, there's kind of pressure from within the group itself to maintain those production increases. As we know, the UAE is always keen to maximize, or kind of to continue to maximize the return on the investments they've made so far. Russia is keen to continue producing more oil as well. With regards to the SPR, our feeling is that essentially that was more of a political move that was really based around optics. If we're talking about the volumes of oil that are being released, 50 million barrels discussed in the US, but 18 million barrels of that was already committed. And that has to be replaced next year as well. So any barrels that are coming out are just going to have to be bought back, put back into the SPR, which, in the scheme of things, yes, we're helping the immediate situation now with an SPR release. In a way, we're talking about a release until April as well. So it really is a move on optics. But I think for OPEC Plus, there are various reasons why it can also be in their favors to keep the momentum, given the uncertainties around the real impact of Omicron at the moment.
Alex, can I ask you about the price action? We've gone from about $86 on Brent to sub 70. What are the speculators doing here in terms of positioning, and what does that mean for the price action from here?
Well, I think it's really a case of the risk off the table. We've had a very strong run up until middle of October. Let's not forget, we took off about 10% from the highs even before the news broke on Friday about the new variants, and then it was just really a capitulation from that point. There's also a lot of other factors, not just Omicron, impacting market price at the moment. You have Fed decisions about continued hawkishness around inflation. And again, we've had a very strong run in the market. We're getting through to year end. If those demand concerns do come to play, then people are going to be quite happy to have taken some money off the table, I feel.
Alex, we've had a lot of conversations with airline CEOs in recent weeks, and some of them are unhedged. So you can imagine the pain as they've seen the escalation above the 80 handle, as they've had to just take whatever the pricing they can get at the same time when demand is challenged. Do you think with this lower entry point, we might see more hedging from some of the big airline companies?
Hedging losses are always a very interesting concept in that it's only ever measured against your peers, and where you really get hurt is where you have hedged and it's around a demand change. So in terms of this correction here, yes, they may well be coming in, but ultimately airlines should be taking a very kind of structural approach to their hedging anyway. Does this give them a good opportunity to hedge further out along the curve? Potentially, yes, but it's very much a kind of a competition from within the airlines as to how they operate their strategy there, basically.
Alex, thank you very much for taking the questions. Alex Booth with us, Head of Research at Kpler.